2.17 million more single women homeowners than single men. Lourdes, what is up with that?
I don't know, but I was one of them, David.
I love it. Uh, Joseph, you got anything to say about that?
That just took the words out of my mouth. I'm one of the single men homeowners though, so I guess we'll have both perspectives today as we dive into this conversation.
That's awesome. And I am on the opposite side, married homeowner, and I purchased once I got married. So we're kind of all different viewpoints. So welcome everyone. Thank you for joining us today. We're going to be talking about home ownership for the people in general, right? We get a lot of questions for 2024 is, should I be a homeowner? What does that look like? We have Joseph Morris and Lourdes Fernando with us today, both real estate experts, gurus in the business, and you heard a little bit about themselves, both fitting what we're doing. Happy Valentine's Day to everybody out there. So Joseph, kind of take us away from here.
Yeah, so I think the main thing of our conversation today is no matter what stage in life you're in, that creating wealth through real estate is very obtainable and within reach for everybody. The key is really just becoming educated and leveraging professionals, as all three of us are on this call, to make this dream a reality. So.
Yeah, I agree. Some of the things that makes a successful homeowner is knowing the fundamentals. So I'm really excited that we're going to talk about that today.
Yeah. So let's go ahead and just dive into the fundamentals of home ownership. It's more so like understanding the basics of the home buying process. The main key is to identify what's important to you. So whether that be location, criteria, such as like how many bedrooms, bathrooms, things of that nature, your timeline, that's really important as well. Are you looking to buy 2 years from now? Are you looking to buy next month? Things of that nature. And then more specifically at the very end, your budget too. Budget plays a huge role when you're purchasing a home. What are you paying as far as rent currently? What are you looking to spend on your home, on your investment? So I think those are four really important basics to understand. What would you say, Lourdes?
Yeah, mine is probably the budget. I know probably a lot of people heard my story so many times when moved here. We didn't really pay attention to the budget. We paid attention to the pre-approval amount, and we went to the top of the pre-approval, and then we had to sell it, and it was really, really bad. And the taxes were out of our reach, and we were pulling loans out, and it was a very hard transition. Probably why I'm single today. No, I'm kidding. It was a very hard transition. So understanding the budget is very, very important, and just making sure you're not stretched, because it did take out a lot of our opportunities to do date nights and to do things like that. That was very important to our marriage because we were very house poor. So to me, I want to say that,
I can add to that for sure. So I went to budget focused. I had a decent pre-approval for my age, and I wanted to find something that I bought a multi-unit. I wanted to find something that the numbers worked without me paying anything a month. So I sacrificed more on location. Now, we both went to the extreme on our scale. I would suggest, looking back and giving advice moving forward, you find something that's more so in your happy medium. I feel like being obsessed individuals, type A individuals, we become really on one side of the scale or the other. I would definitely preach balance.
Yeah, and that's the funny thing. Like, I kind of came in the middle between all of that, right? Like, we were approved for more, and I want to go less, and then we just found a house just that was right in the middle of where we wanted to be. But again, it kind of depends on where you want to be in that scale. I think the cool part too is, cool part, like Lourdes said, is that the VA loan is actually very flexible, right? So you can get approved for a lot more than you think. And then we'll always hear like, whoa, I'm approved for how much? And I'm like, listen, this is just what you're pre-approved for. It's not like you should be going out spending money like it's just, you're making it rain out there, right? That's not, because otherwise you can put yourself in a position. You guys did something smart because you bought multifamilies, right? So that's the thing, if you go up to $2 million, you can still not pay a mortgage payment. And people don't realize that, right? So that's we do a ton of videos around that. So, Joseph, I have a question for you for identifying what's important to you. just because we work with people across the country, like especially from my end, right? We work with people across the country, and it'd just be like the same old, like, hey, I need to buy a 4-bedroom, 3-bath, single family home in Lincoln Park, and my budget's 300,000. What can we do, right? So how, and that's in Chicago, right? So the folks that are out there, it's like a more expensive neighborhood. But so, what are some tips that you could give to people to like, where do you make sacrifices for that home journey, right? Because like, it's not like you wake up and go, today is the day I buy a home. Now, granted, I'm in real estate and I did do that myself. But the thing is like more normally the idea doesn't just come up one day, right? It's
Yeah.
you think about it. You think, whatever your financial situation is, how do you even like start to formulate what that is that you want?
That's a great question. I will tell from my experience, the way that I formulated my game plan was I went straight to professionals. I went to a loan officer. He told me what I needed to make to afford what I wanted. And after the end goal, it's like, okay, just find the steps to it. So that's one. Just go to the professionals, have a consultation with a real estate agent. They're free. And that way they can start giving you some expectations, and they can give you their own trusted referrals as well. So
Right.
Some people may be scared to go with a loan officer and get your credit pulled. Obviously, they'll tell you up front, like, I think you might need to wait a little bit. But if you're right on that borderline of being ready, just get it pulled and see what they say.
Yeah.
So that's the first step. Second step, I would sacrifice. I know your first home, you're in your head as a first-time home buyer, I'm going to live here forever. That is not
Yes, we hear that all the time.
Most people only stay in their homes from 7 to 10 years. You're not going to live there forever. Your family might get bigger. You might get married, this and that. There's so many variables in your life. What I would suggest is finding something that needs a little bit of cosmetic upgrades. Reason being is if you're buying at the top of the market, when you have to leave, let's say you have to leave next year, you're more than likely not going to sell for a profit. Now, if you do a cosmetic upgrade, and it doesn't have to be big, it could be a bathroom or two, or maybe a little bit to the kitchen, some new floors, you will for sure have that money in equity. So when it is time to sell, you can cash out on that. So now imagine if the average homeowner leaves after 7 to 10 years, imagine it's 7 to 10 years from then when you did all these upgrades. Now you're really going to cash in. So those are sort of my first time home buyer tips I give out, because those are the ones I strongly believe in.
Right. And some people are scared to take on projects, so they, we kind of hear the whole spectrum from folks. So they're like, hey, I want to buy new construction. I want it move-in ready. And then we have other people that are like, give me the worst house possible that I can use my VA loan on, right? But again, the people that are listening out there, there's a lot of different loan products that are out there that you can do. And Joe, like Joseph mentioned, is that it's really understanding that budget, like what you personally know as your budget, and then the lender's going to tell you, by the way, this is your max budget that you're going to go for, which we're going to cover here in a little bit. So let me talk about understanding the impact that credit scores have on what you can actually qualify for. Why it's important. Your credit report is going to have 2 parts on it. It's going to have a credit score associated to you, and then the other part, it's going to have liabilities that you have on your, let's say, like a car payment, credit cards. If you co-sign for people, stop doing that right now. Call them and say no, because that does affect what you can qualify for. And if they're late, you're late. And it's not like you could just remove it. Like, that is a permanent thing that will stay on your credit report. Yes, Lourdes, thank you. And the only time that you can have it removed is if you're an authorized user. That's the only time. But if you are a co-borrower, you are 100% responsible for that debt. So you really have to be careful with that. And interest rates are going to affect the credit score is going to have an impact on your actual interest rate, because the higher your credit score, the better financing terms you're going to get, the lower fees you're going to pay. And it can also it could also affect your qualification. So,
David,
yeah,
I have a quick question.
Quick.
I've had a few buyers who reached out to me and they're like, I thought I need a 700 credit score because I want the lowest interest rate possible. Is there a certain credit score that once you hit it, it's like it's just a round of applause for you.
Once you really go over 740, it doesn't make a difference. And
Yeah.
depending on the loan product as well, it's going to have an impact, right? So like for FHA loans and VA loans, really 680 or higher, you're pretty much good to go. Conventional loans, 740 or higher is where you really want to be at. Underneath that, then you start getting pricing hits. So
Okay.
that's why when someone's going into that home ownership piece, right? Like you were talking about starting that journey, that's why we always tell people focus on your credit score. Control the credit, because that's going to give you the most amount of savings on a monthly basis, because you're going to have a lower interest rate, and from an upfront cost, because you're going to have less fees to pay for upfront. So it definitely has a significant impact on that. Lourdes, you want to talk about a little bit about the cost of the home ownership piece to that, and some of the variables for that?
Yeah, but I did want to touch to get you removed from authorized user. It's very difficult. I spent hours last week trying to get myself off of someone who decided to max out their credit card. I only allowed one person to be authorized user, and I went to the bank, and the bank couldn't do it over the phone, even the physical actual bank. So just be very careful when you are doing authorized user. I know you're going to try to help people out, but it can really, really screw you up. Now I'm fighting with credit bureaus to get that off, and it's taking me a lot of time. So, and it tanked my points by 30 points. So it went down. My credit score went down significantly because of whatever authorized user I allowed at that time. And it was supposed to be taken off, and it's not. So just be very careful when you do that. It's very important. So, okay. Now I can talk about the next section.
Well, let me tell you one caveat to that. So you have two different parties, right? You have the credit card holder, and then you have an authorized user, right? So in two different scenarios is that if I'm an authorized user and the holder then racks out their credit card as me as an authorized user, then yes, you're gonna have to go through that process to get yourself removed. If the other person dies, it's really easy. You provide a death certificate to the credit bureaus, and they'll just remove you. That's the one easy way. So I'm not saying like the other person whatever. But I'm just saying like we've run. Chelsea, don't be laughing. Just because we've had that happen, right? So that's why I bring that up. Especially like if you have like older parents, you are like authorized user for them, so you can build credit, right? So that happens. But if you're the credit card holder and you have an authorized user, it's pretty easy to have them removed. It's just when you're the opposite party, it is tough. But Lourdes, take it away.
All right, cool. So let's talk about budgeting for upfront and ongoing homeownership cost. This is something that's very important to me, and that's probably why you gave it to me, is because if a lot of people have the misconception, hey, there's no money down for the VA home loan. I don't need to save any money. I don't bring any money. And we talk to a lot of our clients, and they don't have anything saved up. And once you take ownership of a property and the furnace goes out, or there's an issue with the roof or something like that, you have to fix it. So you have to have a little bit of a nest egg saved aside just in case of a rainy day. That's very important. To purchase a property, we're looking close to about 3% of the purchase price here in the Illinois area. I know that's kind of high. And if you purchase in places like in the city of Chicago, it's a little bit more expensive than if you were to purchase in the suburbs. But then you also have the tax different, like there's all these different factors. So just make sure that you talk with your real estate agent to make sure that you know upfront how much you need to save for to purchase the property. And then when you acquire the property and during the home inspection, it's very important that you're paying attention to the items that need to be fixed. Because if they're not broken now, saying the roof needs to be changed out in the next 5 to 10 years, do you have the funds for that to change out the roof in the next 5 to 10 years? So that's one of the things that I feel like you should really pay attention to is your upfront cost and then cost to maintain the home. And there's so many little tips, and I'm sure we're going to be doing a lot of video. Oh yeah, we actually are doing videos this year on some of the deferred maintenance tips that you should be doing for your property, like extending the gutters out just a couple more inches so the water doesn't come into your basement and cause issues. That's like something that's easily fixed, putting gutter guards so that your gutters are performing the way that they need to and pitched a certain way. Things like that. We're going to be coming with a ton of tips this year to help you to minimize those costs. And how often should you be servicing your furnace to prolong the life of that of your mechanicals too? So that is one of the things that I know we're going to be touching on. And do you have anything to say about that, Joseph?
No, I think obtaining and maintaining are two different beasts in themselves. Obviously, obtaining is hard. It is hard to obtain a home at certain points, saving up for it and whatnot. But doing the maintenance to keep it for that 30 years, as you said, that's the most important key. That's the best thing to do for your investment, because that's what it is at the end of the day.
Mm-hmm.
And you always want your investment to be in the best shape as possible. If it's time to move it, like if you need to sell it, it needs to be up to par, or you're not going to get what you're looking for.
Yeah. And that's what we see with people too, is like they thought that I can get a lot more money. But yeah, if you actually do maintenance on the property, it's a lot cheaper than waiting for everything to break. And then you're just going to spend a crazy amount of money for that. And that's why it also is important to have good credit, because in the event an emergency comes up, access to capital is a lot easier when you got a 700 plus credit score. You can get a credit card right away. You can get a line of credit, but you can't do that, or you're going to be paying crazy money if you don't have that set up ahead of time. So, right now, and I think we did like a video back at the end of December about like just understanding the housing market, but it changes all the time, right? Lord, Joseph, how do you navigate that housing market in 2024? It seems like it's a roller coaster. I don't like one day things are one way, and then all of a sudden, like the next week, it's different. But overall, it pretty much stays consistent, right, throughout the year with that. So walk us through, what does that look like?
Yeah, so I have 4 points that I'm gonna just drop, and we can converse about us, I guess. No numbers involved though. There's low levels of inventory. Okay, so that means that the sellers will continue to have the upper hand in this housing market. This is on a national scale. This means unless there's a random surge of new inventory that hits the market, prices are most likely not going to decrease over this 1 year period. This is just 2024 in general. Okay. Mortgage rates, mortgage rates have to come down from their peak. They have came down from their peak, but they're still high.
But they went back up.
Since prices are still somewhat steep, some buyers are like, I want to stay on the fence a little bit still. Okay. And then if rates continue to drop, what that's going to do is that's going to spur the market for both buyers and sellers. So what we've been advising is, since the rates have dropped a little bit, if you're thinking about buying right now, is the best time to do it. Because as they continue to drop this year, and once the sellers start saying, okay, well, I need to sell my house and then buy a house, not only do those people start getting into the market to play, but everybody who's been waiting on the fence, they're going to be into play as well. And, too much demand, not enough supply is a bad thing.
Right. Yeah. It's definitely interesting.
Yeah, I just had I don't know, many people know this suburb, but Orland Hills, there was only one house on the market a few weeks back. Only one. It had, I want to say 20 offers or something like that. Appraisal gaps, which means people are willing to pay over a certain amount of whatever the property appraised for. So say it appraised for $450 and they have contract for $480. They're willing to pay that $30K out of pocket because they want the house that bad. Wow. And this is at the current stage of our market. It's not even the spring market yet. Yes, we had a short winter, but we're not even in spring market yet.
And this is just with the interest rates dropping to
just
that
tad,
6.
yeah,
just a tad. So just imagine what's going to happen.
Well, I mean, I see, like, that's not bad. I do, like, let's say out in the Virginia area, I mean, there'll be like 30 plus offers, people going 60, 80, 90, 100,000 over list price, that they just don't care, right? Because they want to buy a house. But yeah, I think that's the interesting part of that. But like you guys said, is I'm always a huge fan of that. That's why knowing your budget is important, because if you can buy something now, what are you waiting for? People keep thinking that prices are going to drop. But like you said, as soon as rates tick down a little bit, literally, we have people calling us. We want to look at places, or they'll call the realtors like, "Hey, I want to start looking at places again." Guess what? It's too late by then because that's everyone else is calling to do the same thing. I think that's crazy.
100%.
So
Yeah, it's a supply and demand game. Like
yeah.
that's all it is. So yeah.
Do you guys see? And we also, I mean, one thing that I know for like 2024, but we also have a large baby boomer generation, right, throughout various cities. So we might, over time, there might be some, let's say, availability coming up as people may move out of major cities or move into 55 plus communities. But we really just don't see that right now because also their kids don't have places to live. So a lot of times they're going to be absorbing that inventory that might be coming on the market for that. So,
And, and in
yeah.
certain areas, we are seeing like a lot of like communal living, a lot of like couple generations living in the same household,
Yep.
building wealth together, and then they all go their separate ways, which I personally think is a fantastic idea. That's what I was doing as a renter
Mhm.
for about 2 years when I was like 19. I think that's a great idea to start off with if you're looking to purchase a home, at least for people in my age group.
Right. Yeah. I mean, everyone's situation is different, right? Yeah, some people want to get out as soon as they can. A lot of the other times, families stay together for a long time, right, until they can build up enough money to do it themselves. And Lourdes, how do you actually find, like, right? Like, we have a lot of data out there on like market trends, but how do you actually research an area, and how do you pick the best place for you to live in? Not you personally, but for the people out there.
Well, it goes back down to your criteria, like at the end of the day. So budget is huge. Like how you said, you want, to live in a certain area. We just have to really analyze what the homes are going for, the activity, is there multiple offers in this property? What's the competition like? And then also what is your, what do you like to do? Like, I know when I chose mine, I wanted to go from the south side of Chicago. Now I'm on the west side of Chicago. I wanted to be closer to the city. I was like, I want to go out and go to these restaurants and I want to be there. I want to be next to a park. For some reason, every single house that I've chosen has been right next to a park within a less than a 2-minute walk. Like I'm at a park. And for me, that's been, because I used to have dogs and, hopefully one day I can get another dog. But, I like, to be in that. And so it at the end of the day, and I'll probably go a little bit more personal with this one. It's what you really want. And then you have to put your expectations to it. Can I afford to live in this? And would it put me astray? Or am I going to have difficult, like, can I not travel? Can I not keep up with my lifestyle? So that's one thing we always talk about budget with our clients. And even if they're looking into multi-units, is this property going to cash flow? Because I wanted, I know when I first got my pre-approval, I was like, I am pre-approved. I was like, no way. I was like, my mind was completely blown.
I think you asked for more. You're like, well, can I get a little bit more?
Well, of course I'm gonna ask for more, David. I am on the other side of the extreme, but with I had the vision and a clear vision too of like
It's important.
Yeah, and I had a clear vision of what I wanted. I wanted to do the short term rentals. That was my vision, which I'm doing, but that doesn't work in certain areas. So it does have to, once again, align with what you want. But budget would always be at my first, at the first, like the first thing. Does it fit that first? And if it doesn't, is it far off from where you want to be, or do we have to make some adjustments? And then is it feasible at the end of the
Yeah, that's the crazy thing. Listen, like you can buy there's a house not far from me that's for $30 million. If anybody's interested, go ahead, take a look at it.
Let us
But
know.
then yeah, but then
Yeah,
when you
please.
look at and I kind of because people are always saying that housing is very expensive. And I looked at around the Chicagoland, like on the outside, right? And I found homes. Now, I'm not saying that you want to live in They were like 30, 40,000, decent shape actually. It's just we're depending on where you want to live, right? You can always make it happen, but there's just so many factors that go into that decision, right? Income, do you have disability? Do you pay property taxes? That's all going to be factored in. And then we still have a lot of people out there that have never used their VA home loan. And that might be 60, 70, 80 using it for the first time. We've helped a lot of people with that, especially with condominiums, because I think it's a great starter place, but it's not for everybody because condos have their own challenges, which that alone would take like 3 hours to do a video on, or to do like a live event on. So if you guys have questions on that, definitely, we're happy to answer those for you as well. So I think we talked about how to time your purchase, right? It's just really going to depend on your situation. And we always recommend, like, if you can afford it, let's roll into it. So now let's talk about the roadmap for becoming a homeowner. So the first thing you really have to understand is the pre-approval and what that entails, right? We talked about it. We touched on it a little bit. A pre-approval is where a lender is going to actually do a hard credit inquiry. You cannot run our systems on a soft credit inquiry, right? It has to be a hard credit inquiry. Unlike when you look at, this is probably the number one thing that people say. They'll be like, listen, I don't want a hard credit inquiry because my credit score is going to drop. But for how long do you think it's going to stay on your credit report? They're like, oh, it's going to be on there for 2 years. That's what's called a Vantage score. That's what consumers see. Lending institutions don't see that. We only see 90 days and then it falls off on your credit report. And you do have a 45-day window to have your credit looked at with only impacting it as one credit inquiry. If you are on the border between like maybe a 620 is exactly where your number comes in, I could understand that someone doesn't want to go a little bit lower because the financing terms can change, but it's something that a lender needs to take a look at. And you better be submitting all your documents, like income documents, assets, tax returns, because I'll get phone calls from Lourdes all the time and Joseph, like, hey, we have a client that's under contract. We're a week from closing and the client got denied. Why is that? Because the pre-approval wasn't done correctly, right? And that's not working together. That's with other people. That's why that pre-approval process is so important, because a good pre-approval, basically you can get to the end. The only thing that can come up is going to be the house maybe not being, well, we have a lot of home inspection issues, right? Which they'll cover, but that pre-approval process is you want to submit all your income documents, taxes, insurance, bank statements, W-2s, 1099s. If you have a multifamily and you're renting it out already and you're filing your taxes, please talk to a professional before you file your taxes, especially right now, because you can mess up your from purchasing more properties. No, that wasn't directly at you, but I'm just saying.
Yes, it was, David.
It wasn't.
You directed that towards me.
No, it wasn't. It was towards the people, because I come across this all the time. Joseph, you're a victim too.
Yeah, I have a quick question.
You're gonna cry, David.
So am I. Listen, so am I. So it's okay.
I have a quick question.
Yeah.
So as far as the pre-approval process, I don't want to backtrack too much, but pre-approval process cost. I know there is some. Will I get in trouble for saying this? It is what it is. Veterans tend to look on Google and find the most friendly VA lender they may find.
Yes.
What are your thoughts on that?
Yeah, I mean, this is the thing. I think in life, everyone has different expectations of how they want a transaction to go, right? The big banks, not big banks, seriously, like most of the time when you get marketed to, it costs a lot of money to market to you. You write all those ads, all those fancy people that they have, infrastructure costs, and they have call centers, right? So if you like a call center experience and would love to pay 2 to 3% more money to get that non-customer service experience, then that's what you go with, right? And like you and I, we know this because we run across that all the time, right? Or are you looking for someone that is not going to charge you crazy fees, or like not charge you any fees actually, right? Because there's plenty of banks out there that won't charge you a penny. You'll just pay third-party closing costs. But a lot of times clients just don't understand how to compare fees. And this crazy part, Joseph, is that nobody explains things to veterans, because we'll talk to them and they'll be like, yeah, I don't even know what my closing costs are. I'm like, what do you mean you don't know? Like, no one's told me. But you've signed documents with the dollars on there. Nobody's explained it. They're like, no, I don't even know what to do. That's why, when we originally talked, the team is so important, because you guys do a phenomenal job at explaining a contract. How to, is my earnest money protected? Right? A lot of people don't even understand what that is. They're like, what do you mean I have to give money down? I'm 100% disabled. I'm a veteran and I'm disabled. Why am I even paying closing costs? Even like the basic stuff of just understanding that is so critical. But yeah, to your point, Joseph, if people like to spend more money than they have to, because we see a lot of times people get wiped out from their savings, which is crazy, and they never had to. So definitely do your research on that, right? But that's going to be really the first step, is knowing the financial picture. And then you basically, once you pre-approved, then it's handed off to someone like Joseph. And Joseph's like, watch me do what I do. So what happens next?
So yeah, and then we go to the art of house hunting. And it truly is an art. I mean, there's a lot of people who can call themselves artists, but their paintings aren't beautiful. If you catch
look at that. Dropping some poetry on a
yeah.
All right. What's going on Wednesday? I love it.
It's all love. It's all love. But we just want to make sure we're being efficient and effective when we're doing your search. I think one of the worst things is, I have a client who comes to me. They had a previous realtor, and their realtor just wasn't real and honest with them and upfront, and gave them honest expectations. And I think that all happens when you have your first consultation with our team, whether it be Lourdes, whether it be me. During this consultation, based off of what you tell us you want and your needs, in your investment strategy, we know how to tailor it to you, to give you really the best experience. Whether we suggest, like, I know you love this location, but for your budget, which is what you said is most important, let's try this suburb just 5 miles down the road. Let me just send you over a couple options and see if these might be what work for you. And I don't want to say 10 out of 10, 8 out of 10 times, that's usually what happens. So really just prioritizing those needs is very important. Yes, it's great to find something that checks off your wants as well, but we want to make sure we get your needs covered. And then last is really just virtual tours. And we leverage technology at all-time high. I've had multiple clients, we both have at this point, who have purchased homes while deployed, while PCSing. They haven't seen the home until closing day, after closing at that.
That's crazy.
My most recent one, she didn't even see the home 2 weeks until after she closed, is when she got back from being deployed. So, those are very real possibilities. And the way we do it is just, we're very upfront. Like when we walk through a home on FaceTime with our buyer who's somewhere else, who's trusting us with the most important thing in their life. Hey, so-and-so, we just walked through this front door. I don't like this property. I'm gonna let you know right now. We're here, so let's look at it. But based off of what you told me, I'm gonna be real with you. I don't think this is a smart decision. And most often than not, they take our advice because we have built that trust. And that's why I say it's an art. Like you really have to build that relationship with your client and understand what they're looking for. It's not always easy, as Lourdes could probably tell you.
I've gotten into showers to test the height. Yeah. Of course, I am fully clothed. Yeah. Maybe people won't think that, but I'm walking in, and if they're like, "Hey, I'm 6'2", I'm like, "Cool, I'm wearing my heels." I'm like, "Hey, the shower head is gonna get you in the eyeball," and I'm on FaceTime showing them low basements, like, "Hey, this is what it looks like. This is my height today," because mine changes. Joseph is consistent, but mine can go up and down depending on how I feel and how swollen my ankle is. But Anyways, but yeah, I've done some tours that were very specific. Even the smell in there, we're going, hey, there's like this very strong odor in here. So I'm very descriptive and showing them like even more like, hey, like let's pay attention to this. And recently I did a showing too, and there was some water that was coming into the basement, but it was like so weird. I was like, where's this water coming from? And then I'm like, oh, and I went outside. I'm like, it's coming from the gutter. It's going down the deck. It's going under here and getting into the basement. It was crazy. So we were able to determine that by just doing a little bit of investigation, and they ended up passing on that house because they don't want to deal with a flooded basement,
And
nobody wants to deal with it.
Yeah, nobody wants a flooded basement. But I think that's another really important thing. During our first few years in the business, we attended almost every single one of our inspections. And the reason that's so important is because when we walk through properties, we already know what the inspector is going to look out for. We know what they're going to be pointing out. So if we can if we could save our time by, all right, look at this peeling paint. This is an issue. The furnace is roughly this old. The roof is roughly this old. These windows are not brand new, but maybe about 7 years old. We could save you a lot of time and your money as well. We don't want you spending $400, $500, $600 on a home inspection. And this is not going to be the one for you, when we could have easily pointed it out during our walkthrough of the initial property. And then the second part is when we do get to point, I'm gonna give out a little bit of secret sauce here. When we do walk through the property and have all these material lists in our heads, when we go to negotiate with the listing agent, it is that much more. You see, she's like, it's that more efficient, because when I'm on the phone call, I'm asking for this exorbitant amount of credits for my buyer. One, because they're a veteran and I can do that. And two, because these things are incorrect in the property.
It makes a big difference when you know what you're talking about.
100%. We can either handle it now or we can handle it at inspection. But I think it would save us all time and be a win-win for all parties, not just seller. I'm not trying to bully you. I just think we should be efficient about how we use our time. And that's the best way to do it. So,
well, I mean, to your point is that, yeah, if you find the property, it looks good, but you don't know some of the basic stuff, yeah, you're spending another $400, $500, $600 on an inspection. A lot of times people order the appraisal ahead of time, so you could be at $1,000, and if you're buying a condo, $1,500 just out of nowhere, which you can use that money towards closing costs or just moving alone. So that's awesome. No, so good points on that stuff.
Yeah, I think Lourdes is going to, since we went through the pre-approval, we went through in the field work, I think Lourdes is going to go ahead and bring us home with making an offer and actually closing the deal.
She's the closer is what we call
the closer.
This one over
the closer. That's it.
The closer.
The closer.
Yeah. So one of the things is just kind of like building off of what Joseph was saying is building that, crafting the competitive offer. So if we're in a market, that's a good strategy. And we used that a lot last year when there was not a lot of buyers and we were able to get the closing costs. We were able to do a credible amount of concessions and under list price last year, and using that tactic. Now, if it's on the other spectrum where it is a very competitive market, we're advocating for our veteran clients by actually educating the listing agent on the VA loan benefits. Yeah. Why is this better? And if there's multiple offers, because that's happening right now as we speak, there's multiple offers. And we're saying, hey, did you know that this is very different from the FHA loan? If there's appraisal items that need to be addressed, we can actually do that. And my client has money set aside to complete these after. So it's not going to hinder anything up. And we can even fight these things like lead-based paint. If it was after 1978 and they came back with lead-based paint, we can fight it and say, hey, this is not lead-based paint because it was after the home was built after this certain amount of time. So there's a lot of things that we can do with the VA loan. And that's one of the things that we actually teach the listing agent, because they have all these crazy offers and then they come up with this VA loan. They're like, oh, wait a minute.
They have crazy ideas. That's the problem. A lot of
Well, yeah,
misinformation.
that's our job to like educate,
Right.
and a lot of the times, like we didn't get this particular offer. I mean, we went even $50,000 over on a yeah. It was
Yeah,
we
yeah.
didn't get it. It's a very competitive area. And then the listing agent was like, your client's very lucky to have you, because that means we're probably one of the top contenders, but they probably got a cash offer. That's something that most of the time we can't beat, and especially if the cash offer is really high. So so that's another thing. If our client has a crew or in the construction area or okay with some of these things, and we're on the other end where we need to be very competitive, we say, hey, we know that there is termite damage. We know that there is this. We know that there's all this. And we're letting them know that we saw that. So when we have the inspection, we're not going to cancel because we already know that. So that's another way that we can craft these offers if we need to be competitive. Now, if there's no competition, we're on the way other side
Well, that's
of that. And
yeah.
Joseph can well, I think he already mentioned it. But
Yeah, on the other side of no competition.
no competition. Yeah. How do you craft that offer? There's no competition.
Yeah. So it's really, first, to realize that there's no competition, you have to be aware of a few different factors. You have to run your comps. I've spoken to a few agents who don't run comps, and what I mean is, you want to see what has sold in the last 6 months in a 1 mile radius. If there is a certain property that's sitting on the market for too long, it more than likely it's overpriced, or there's something wrong when you walk through. More often it's overpriced. So just really having that conversation with your clients and providing the actual facts, like, hey, it's really overpriced right here. I know you want to come in. I've had somebody come in $50,000. They want to come in $50,000 below. We ended up getting a signed contract at the exact price that I told them we were going to at the very beginning. But that's just coming from giving the actual facts and knowledge. Okay? Oh man, you're gonna have me just give a lot of sauce.
No, you don't have to give too much sauce. That's why people need to contact us.
Don't do all the sauce.
Yeah.
Yeah, so it's
it's
more so just having that actual data to know
right
where this property needs to be at, what number will make it work, and then it's practice. Like, this is not something I just woke up my first year and was able to nail right off the top of the head. No, you have to be with somebody who's in business and practicing business at a high level frequently, because then they can give you the best insight and they know what's working. So
right. Yeah, because the data is out there, right? Everybody has access to the same data. It's what you do with that data that makes you different.
Yeah. And I even remember, and we had a mutual client, David, that there was I think 20 something offers. It was very competitive. It was a VA loan, and I was able to really walk the agent even to make modifications. We had to fight the appraisal just because it wasn't listed correctly, and we won that as well. So even explaining to the listing agent, like, hey, I've fought appraisals and won them, and I can help you and guide you and do what you need to do. This particular agent left off that there was an additional 2-car detached garage. So it was a 4-car, not a, she didn't put that in the listing description.
Right.
Everything else had all the other square footage in that area, and the comps included the basement. You're not supposed to include that, but the other ones did. So I had to break that down, and she made adjustments necessary. Yeah, you remember that one now?
Yeah, I remember.
But working with the, with the team, and just setting yourself apart, saying like, hey, I've done this and I can help you do this, successfully do that. Yeah. And we were able, and it appraised no problem after we fought it. We justified it, and it was a little bit hard, but it's fine. We did it because that was the actual value. And, she listed it way, way below, and there was a ton of offers, and we ended up winning that particular one. And my client was very happy to get it with the amount of, there was a line, a line of people.
It's
there was
crazy.
one day to see this property. There was literally a line. We had to wait 20 minutes to see that property. And after we saw that, we didn't want to see anymore. I was like, oh boy, this is going to be hard. Yeah. And I think everybody submitted an offer who saw that it was gorgeous, absolutely beautiful. But
That's
that
crazy.
was
one thing you had highlighted earlier is that you did miss out on an offer. And I do. We have talked. We have made this a very win-win-win detailed class, I feel like. but please understand that your offer might not get accepted every single time. So don't become discouraged.
Yeah, that's a good point, Joseph, because we have that happen a lot.
Yes, it does. It does happen. Yes, we have a lot of win stories, but we also have a lot of like, okay, well, we have to go back to our buyer and deliver this news that we don't want to deliver, but it means we're gonna have the next one, or there's something better out there for you. So just keep that in mind. Don't get discouraged because the first house you submitted an offer to, you didn't get it. You still have time. You're gonna be all right.
I think that's why the timeline is so important. Yeah, and actually, let's spend a minute on this. Some people out there on their first shot will be like, got the property, one and done. But we don't see it that often. It's very rare. I'm the same way. I woke up, bought a house. You'd say, Joseph, same thing, one and done. And I'm like, and then and so when people come and get pre-approved, it's one of two things. I need to buy a place right now, or I'm not buying a place. And then the other one is like, oh, I got plenty of time to buy. I just want to know where I'm at. More often, the time that people are like, I really don't care, they find a house right away. And then the people that are like, I need to buy something right away, they often don't find something.
Yeah.
You got to find out where that perfect balance is, because sometimes people are like, hey, my lease is up in 3 months, but I found something right now. If you find something right now and you can get it, execute on it. Because in 3 months, especially right now, you're going to be 20 offers high, and there's a lot of people with money out there. So they come in cash, they go 30, 40,000 over. So if you don't have that money, really now is the best time to buy. That's just kind of like my 2 cents, because it is sometimes heartbreaking to see where people are like, they really want to do it, but if your time frame is too short, you're putting undue pressure on yourself. And then, you always have that FOMO, right? Fear of missing out. Like, what if better properties come on the market later, but I bought something now? Be happy that you have something, because a lot of people don't. Especially like leveraging your VA home loan. There's a lot of good things that you can do on that. So as you guys can tell, there's a lot that goes, actually majority of stuff is before you even go under contract. Like, that's the most important stuff. And then once you go under contract, there's definitely drama, right? We all know that. But it should be minimal, right? There could be some things that go wrong, or appraisal things, but those are easy things to overcome. It's to getting to that point. It's where a lot of people want to get to. So let me just talk briefly about what that looks like from a lending side. So once you do the pre-approval, you submit all your documents, you back off to a team like Joseph and Lourdes. And then once you go under contract, then the real work begins, right? You go through an underwriting, or you go through processing, underwriting. The lender orders the appraisal. No, you cannot go to the appraisal. It's going to be the listing agent, buyer's agent that's typically going to show up. It's someone that's assigned by the VA. And then, you go through the document gathering process. And I'll tell you that sometimes, yes, we're going to send you a blood sample in the mail that we need back because we have to verify some things. Okay. It's just sometimes can be painful, but at the end of the day, everyone's got to go through it and just accept it for what it is and provide the documents, because you're not getting a mortgage without them. This is why, we do these classes too. We have a bunch of stuff on the channel about how to prepare for a pre-approval, what goes into that, right? Because typically on a VA loan, it's like 21, 24 days. Like I did mine in 8 days. So it's not like it's crazy, but just, talk with the professionals so you can get a good, realistic piece to that, right? But Lourdes, walk us through just kind of like that closing and what really happens after you purchase the property.
Yeah. So after you purchase a property, you got to pay for it. No, I'm just kidding.
I know. Well, listen, your first mortgage payments in arrears. So that's something to actually, let me touch one base on that. If you close anytime in January, your first payment's going to be in March. Okay. So you always have that little window. Yes, you have to pay for interest in it. So that's why a lot of times people try to close in the beginning of the month, especially if they have a seller credit, because then they can basically have the sellers pay for their first mortgage payment and then they don't, then their first payment's 2 months later. So that can be a strategy for the people out there that are going into a property before the lease is up. That's it. I'm done. Thank you.
Yeah, so definitely one of the things that you have to do is make sure that you have, once again, that budget set aside for any type of deferred maintenance. And now, and we didn't touch on this during the pre-approval process, but you can't buy cars, you can't do anything like that. The day that you close, if you are waiting to purchase that car, that's when you go get your car, okay? Like, that's the day after closing. So these things that you want, then you go buy the furniture, then you go buy these things. Do not do any of that before you purchase your property, because that's not good. Also, keep in mind that the closing date is not a set date until we get that clear to close. So a lot of people, like, they schedule movers, they do this, they're like, hey, this was supposed to be the closing date. That is not, like, it's not guaranteed until you get the clear to close. So be very flexible. And I know it can be really difficult to plan, but don't set anything in stone. If the property is still being worked on, give yourself an additional amount of time just in case. They're doing construction to properties, so anything can happen. And we've seen where there's back dates with like countertops and cabinets and stuff like that. So just be very, very careful with that. Just set that expectation that it's not going to be there. And then also, if you do have a disabled veteran, if you do qualify for disabled veteran exemption, just note that it's not going to be in the state of Illinois. You apply for it the very next year at that when the first installment opens up. So just having those expectations, like, okay, let me put this in my calendar, then start scheduling out your deferred maintenance items and just make sure, okay, this was cleaned out. We had it cleaned out during the attorney review inspection period, or as soon as I moved in, I cleaned out my ducts. I cleaned out everything. Yeah. I'm going to schedule for the next year that this needs to happen. So just making sure that you do that. And then also revising your budget. After you get the first 2 or 3 months of your utility bills, you can say, okay, maybe I need to turn off my lights when I leave. Don't keep them on, so I can lower my bills. And then also getting things like, if I change it to a smart thermostat where it's the heat is not on all day while I'm away, that can also save you some money, so that you're not spending so much on your electric bill. So that's where we definitely want to save and start analyzing your expenses. I know Joseph analyzes his expenses every Sunday, and I love that, and I'm going to start implementing that. But doing that and just continually revising, seeing where you can cut back, and then what you can do. And yeah, if you want to hit projects, I know when I my almost my entire commission check went to go buy a new driveway. So I put concrete on my driveway. That was like my thing. I did some tuck pointing immediately. I was like, don't want no water in my house, tuck pointing. I need a driveway, cement. And I blew all my money like right away on reinvestment into the building. So I don't have any issues, don't have any issues, but I can prolong water getting in and stuff like that. So just making sure that you budget accordingly and you plan those out.
Yeah, there's definitely a lot that goes. Yeah, especially that upfront cost to do stuff. I know, Joseph, you were nodding head. You did the same thing. I did the same thing. Like, I came in and I'm like, oh my God, I gotta get stuff done immediately. Like, it was a jungle where I lived. So the huge tree branches hanging over the house that were dead. And I'm like, all of this has got to go. Neighbors were not happy with me, by the way, because we had to go into their yard. But it's okay though. There's just costs that go into it, right? And sometimes even moving is going to cost money unless you got buddies that have trucks. That's why budgeting, all of the stuff that we talk about today is important. And Lourdes, you touched on some good stuff. Like, yes, once you've been pre-approved or once you go through that process, don't buy anything without talking to somebody.
Your lender.
Lenders do a soft credit inquiry before closing, so they're gonna know, like, hey, you went out and opened up a credit card at ABT. It's an electronics store. It's phenomenal.
You bought a car. You financed a puppy. I had somebody return their puppy because they why would you finance a dog?
That's sad. You finance a puppy and you have to someone had to return it.
$4,000 dog.
Yeah,
What was yours?
somewhere around there, like 3,000-4,000.
No way.
Yeah. That and those payments are at like 26%, and they are expensive.
Very much so.
I've never even heard of that.
Yep, I've had it. I didn't know you had one too.
Yeah, don't buy the brand dog.
I've never had somebody. I have someone like put a deposit down on a dog. Okay, that makes sense, but never have had someone like, "Hey, I just bought. You put a $4,000 dog. That seems like ridiculously expensive."
Yeah.
But anyways, don't do anything financially without talking to somebody. Yes, sometimes you have to switch jobs in the middle of a transaction. That's easy. If you need to buy a car, that can also be really easy. But if you talk to somebody, they walk you through it. You have enough timeline. Sometimes we have to tell people. I did it. I had when needed to switch out my car. I had to wait till the day I closed, got the keys, and then did it. And I do this for a living. Okay, Joseph, same boat.
I had to get a second job to qualify to purchase my building. Even though, because as a 1099, you need your 2 years of taxes, blah, 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 whatever. But I had prior W-2 experience, but I didn't have my 1099 experience yet on my taxes. So I went as a W-2 person to buy this building, even though I could prove I was making a lot more with real estate. I quit right after they funded my building. Once they said, you're good to go,
No, you shouldn't be saying that out loud, but that's okay.
Oh, well, you should have gave me a nod or something.
Making a joke with
It's a
everybody.
building, not a
A building, though,
a
yes.
building. That's
yes.
going to be covering all the mortgage, and he's
Yeah.
Covers the mortgage. But also, that was one of my pitfalls I had that week after I closed. I had a leak in my ceiling. And this is not a leak since, as a homeowner, you could I could put this off for a week or two if you're irresponsible. Just saying. This is a tenant, somebody who pays me to live there. It has to be done.
Right.
That was about $2,500. And that is why we stress so much having some kind of nest egg saved up for, a rainy day.
And then, just to reiterate, Joseph had 2 jobs, and he had 2 very full-time jobs as a real estate agent, he was doing good money at the time too. So he didn't just quit all of his jobs.
No, yes.
He just quit the one that needed to qualify for the loan, but still had way more than enough reserve set aside for deferred maintenance.
Yes, I should have probably consulted an attorney before saying that.
I was like, don't do that.
Yes,
you still have to pay the mortgage, and he was a real estate agent. He just couldn't use that income, and I just had to say that.
Thank you so much.
No, you're good. Good to see this. Everyone needs a good attorney. A disclaimer over here. And that's the other thing. Lourdes, good point is that, right? If sometimes it takes people 2-3 years to be able to get to where they want to be, but that's why you got to talk with somebody. If you're thinking about doing it, it's never too early, but it's definitely can be too late, right? Because people will be like, I need to buy a house right now. And I'm like, you don't qualify. If you would have came to us 6 months ago, we could have put you in a position that's better for that. So, Lourdes, Joseph, thank you so much for coming on today and talking about homeownership with everyone here on Valentine's Day. We have more content like this coming out in the future. Watch our videos, like the channel, and then we're going to catch you guys soon. You guys have an awesome day.